All right, what is up, guys? So today we're going to be talking a little bit about how to manage your trades. So I'm going to be going through my Doge trade as an example. If you've been following me on Twitter, you know that this is something that I've been very adamant about, and it's paying off very nicely. So we're going to run through, consider this maybe like a Dogecoin trade recap as well. And keep in mind that everything that I'm going to discuss is me and my spot portfolio. So I haven't taken any leverage trades on Dogecoin, but I have been trading it on spot. So just like any other chart that we're assessing, we have to start on the higher time frames first. That's typically how I go about doing things. And then from there, we can apply context moving forward. So really what I want to do is I want to get rid of these levels, or at least some of them. And I want to draw out some pretty high time frame relevant zones that I'm, keeping an eye on for Dogecoin. And so essentially where this starts and what appeals me to start trading Dogecoin in the first place is a little bit of this uptrend here, and which you saw on a lower time frame. We have those 4-hour 200s, kind of like this, right? A little something along those lines. So we're reclaiming high time frame trends here, as well as on this time frame, which is a very high time frame. So this is the daily chart. We have that uptrend that's forming as well. So that's where it all really starts in terms of like high time frame significance. But what really sticks out to me is us starting to break out of this almost like a 2-year long range. So that's where we can definitively say this time is different to all these other times, maybe bar that one time, obviously, right? But more or less, we are breaking out of the range. We have the uptrend, so the wind is to our backs per se. We have all these time frames are collectively bullish, and we're breaking out of the highest time frame, what is still a bearish, which is really just a neutral argument, but it's inherently bearish because range highs, mid-range, range lows, it's what's being implied. So when we break out of that range, we're now shifting the context. We're shifting the environment bullishly, and from there we can look to target whatever the next relevant resistance level is on our chart per our perception. So you may agree with me, you may not. It's totally fine. It's totally arbitrary. But from here, from breaking out of this 2-year long range high, I get to target around 16 cents or so. That's the next high time frame relevant region of resistance. And then my job from there is to zoom in to lower time frames to give myself a more actionable way of actually trading that price action in the first place, so that I can play into this idea that breaking out of this region might allow Dogecoin to run another 70% into whatever the next major level is that I have marked out on my chart. So that's where it becomes time for us to zoom in and start to give more context and more detailed kind of an analysis so that we can actually execute off of that analysis. So quickly, let's just go to the 4-hour chart. And I kind of front ran myself a little bit because we had already seen what these 4-hour 200s looked like. And obviously, as we're breaking out of this range, we're not really near these 4-hour 200s. So any position that I'm putting on here, I don't really have a very clear invalidation because I don't have the luxury of being pre-positioned prior to the range high breakout. Whereas like something like this, at least I can use the range lows, which I didn't draw, but you can imagine are somewhere in this region. I can play into the idea that we're both ranging on a higher time frame as well as uptrending and shifting right into an uptrend on this time frame, and I can trade that into the range highs, as well as I can maintain some of that core position just in case we do break out of those range highs. So this is where things get a little bit contextual and intangible, because now we're going to talk about conviction, and conviction is what allowed me to justify entering this position around 10 cents anyways, even though my invalidation was pretty far away. Right? Because I'm using these 4-hour 200s to scale into the higher time frame analysis, which is now that we've broken out of this level, we can then go to the next one. And that's a 70% move. So obviously that's really fruitful. I should want to play into that. But the price action itself and the way it's developing is not really allowing me to do that. So the good thing is to balance out the not so ideal kind of invalidation, I have a very strong conviction in the thesis in itself. If you do follow me on Twitter, you saw about how I was discussing the Doge BTC chart and how Dogecoin tends to rally every time that BTC reaches all-time highs. And a lot of that really did have a big impact as to how I was looking to position in this trade and why I wanted to be in this trade so badly. So that absolutely did skew my conviction in the thesis for the trade in the first place. But nonetheless, we could dig down that rabbit hole to infinity. Because again, conviction is an intangible concept, and unfortunately for you guys, the intangible concepts in trading tend to be the most rewarding because they're the hardest to grasp, right? I can't quantify conviction for you. I can't tell you exactly what it is that makes this price action stick out to my monkey brain. There's just no way for me to really do that. But regardless, the point is, eventually I find myself positioned in Dogecoin, and now it's a matter of managing that same exact position. So here's how I go about doing that. Now that we've understood, I position in Dogecoin, however it was, whether I bought the 4-hour 200s reclaim, or I bet on a bottom here, or whatever it may be, or I buy the breakout, whatever it is, I have a position on Dogecoin. Now it's my job to manage it. We already discussed that price action breaking out of this level allows for price to go to whatever the next relevant daily supply zone is per our discretion. So in my opinion, that is around that 16 cents level. So that's my main first target. I don't really see too much resistance on the way up into that region. So I really am just holding at least a bulk majority of my position for the next daily level. And then when we come into that daily level, I'm just going to take profit. It's not that I'm flipping bearish because we tested 16.8 cents or whatever. It's just that I'm taking profit for the sake of I cannot profit from this market unless I take profit. So there's a very clear discrepancy there. Do not confuse profit taking with flipping bearish. But regardless, when we come up into that supply zone, I am a take profiter. And nonetheless, I am still maintaining a core position in Dogecoin just in case it keeps running. And then from there, I'm reliant on my ability to adapt to the market and manage the trade moving forward, just in case things start to retrace back to my entry and break down and whatever. So now it's a matter of, how do I do that? How do I actually manage the trade now that I'm in it, now that I've taken some profit off the table because we got to that supply zone, we got to my first take profit level, so I sell some, ask questions later, and see how things play out. And that's exactly what I do. So when we come back into this local trend zone, now granted, this is not the greatest example, but if I'm being totally honest, what I ended up doing was I bought these hourly 200s with the profit that I ended up taking off at this resistance level in the first place. So I'm adding back to a core position because I'm winning. And a really core concept in trading in markets is you want to add to your winners. You want to let your winners run. And it goes back to that video that I put out last week where we're talking about betting on the UFC fighter or the boxer that is winning. So it doesn't really make sense to just suddenly start betting on underdogs because they're unlikely to just suddenly become the greatest fighter of all time. Instead, we want to bet on the greater fighters and then hope that they continue to win and prove their superiority. So on this dip, and yes, it is a dip, unfortunately, because it's into a local trend, when I think that the market is over-exaggerating and BTC, when I go look at something like BTC, it's also testing hourly 200s in this same exact event. If you follow along with my BTC analysis in my free Discord, by the way, or just on Twitter, you know that that trend is what I was discussing for about a month and a half as we ran into all-time highs from about 45K. That was a really significant trend to be paying attention to for BTC. And that's where, again, even though this isn't the cleanest thing on Dogecoin necessarily, I can apply just a little bit of context to justify if I'm going to buy a dip, would I rather buy it on BTC or would I rather buy it on Dogecoin? And for me, the answer to that question is very easy. I'm going to buy the dip on the outperformer that has drastically outperformed in the same exact time span and has rewarded me to a much greater degree. So I'm happily going to add back some profit onto my Dogecoin position. But regardless, let's say you don't want to believe that I did that. Let's say that you think that it's pretty arbitrary and I'm using context and now I'm overcomplicating things. What I need you to understand is a lot of decision-making processes in markets or in trading, whether you're managing a position or looking to enter a position, or whether you're sitting there debating with yourself, is the breakout a breakout or is it still a bearish retest? Or should I be watching this trend or should I be watching that trend? Instead of thinking so much in terms of right or wrong, I want you to think more in the terms of pros and cons. So you can decide to add back to your position on a local trend retest. You can opt to do nothing. You can opt to cut more of your position just in case we break down below that local trend. whatever it may be. There is no right or wrong, there's only pros and cons. I want you to hear me when I say that. What I've found in trading is a lot of our decision-making processes are less reliant on what the market did, and they're more reliant on what we convinced ourselves we would be able to stomach in case the market did something. And then what ends up happening is the market does that something, you told yourself that you were okay with it happening, but here it is happening and you're not okay with it. So in this example, pretend like you opt to not buy the hourly 200 MAs retest. And you tell yourself, it's okay if we bounce from hourly 200s. I'm not going to feel any FOMO. I still have a position on Dogecoin. It's all good. No worries here. And that way, if we break down below those hourly 200s, I won't feel like an idiot for adding more to my position prior to it going lower and giving more money back to the market. But then Dogecoin starts to bounce from those hourly 200s and you're like, oh, wait a minute. I should have bought the hourly 200s. I'm an idiot. And you end up market buying this local top, and then suddenly you have now destroyed your position. It doesn't matter that you have a 10-cent entry. Now you're wishy-washy. Now you're all over the place, and you're succumbing to emotions just like every other 95% of market participants that do not make money in markets. So here's the thing. You run through that decision-making process. You assess the pros and the cons with the decisions that you're going to make. And as time goes on, you're able to start attributing significance. So just like we said for something like BTC along hourly 200s, where it's this trend for about a month and a half straight, we can clearly see that the significant event would be breaking down below the hourly 200s. And rightfully so. As soon as we broke down below those hourly 200s, the first sustainable breakdown and shift of that trend, the first shift in market structure, we extrapolate that. Yep, that's a downtrend. Even a 4-year-old knows that. That's the first time in a month and a half after getting a 77% rally that we even allowed for a deeper pullback into a higher time frame trend portrayal. So let's extrapolate the same way of thinking and apply it back to Dogecoin once again. When we go back to the hourly time frame, we can see that over time, hourly 200s start to be respected as a local trend. Now, granted, this is a pretty deep wick, and you can make arguments that maybe there's a better trend portrayal or whatever it may be. Please remember that everything in markets is discretionary if you are a discretionary trader, so it's up to you and your own discretion and how you perceive things, and then how you want to go about executing off of those things. And that's why it's important to think in more along the terms of pros and cons rather than right and wrong. But regardless, over time, we can definitively see that hourly 200s start to act as a local trend portrayal. Now here we are breaking down below that trend, so if I haven't already, it's in my best interest personally at that point to start taking more profit off of the table and stop thinking that we're going to immediately expand higher from here. Because that's the first time in this entire rally of which I can see something more significant has occurred in terms of a bearish argument, which has not been able to develop anywhere throughout the rally from the get-go. And that's where trade management is actually necessary for me and for my system and my position and the way that I'm personally stanced in the market, everything. That's where I can start to be able to justify a different action that I have not been able to justify for this entire rally. On the way up, I'm taking profit because we're tapping a key resistance level, and the logical expectation is, I don't know, maybe resistance acts as resistance. Maybe it gives us a deeper pullback. And obviously we got a bit of overthrow, but that is what ended up happening. So even though I feel like an idiot for taking profit at the resistance here, I feel like a complete genius after the fact when we start to get rejected from that general region. But this time's different though. We're not testing a resistance level. It's not that we're still bullish and we're just taking profit for the sake of taking profit. It's that we're still bullish, we're still maintaining a core position on this asset, but a new bearish argument has developed. So we want to at least acknowledge it to some degree. So now, at that point, your decision-making process, the pros and the cons that you would run through would be along the lines of, is it in my best interest to take more profit here? Or would I maybe rather do nothing and hope and pray that the higher time frame trend portrayal holds, and eventually reverses nonetheless. And that way, I'm not over managing a trade and maybe chopping myself up. Or you could even say, I want to cut the position entirely and bet that I will be able to buy back the 4-hour 200s. I'm going to try and make the most from that recent rally and then compound those profits on the next high time frame region test. I just gave you 3 different options, and every single one of those options have a different set of pros and cons that will inevitably come attached along with them. You have to be able to start thinking in that manner. Really quick, I just want to give a shout out to the sponsor of this video, Coin Market Manager, the lead journaling and analytics tool for crypto traders. Connect an exchange account via read-only API for fully automated imports, saving you hundreds of hours of manual data entry. Analyze your trading habits in just a few clicks and improve strategies with data-driven insights. Link in the description below. So let's keep it going. Let's keep the ball rolling. When we break down below hourly 200s, my personal trade management, the pros and the cons that I said that I would be able to stomach the best was taking some profit off of this trade due to the local bearish argument forming, but still maintaining a core position in this asset just in case it does prioritize the high time frame trend without ever giving me a high time frame trend retest, as it did. So essentially saying, oh, I got front ran, that was the bottom, we reclaimed the hourly 200s from here, and I never am allowed to readapt to that argument coming back into fruition. But in this scenario, it actually played out really beautifully for me. The profit that I took off at this local trend breakdown, I was then able to add back on a high time frame trend retest, negative 25% lower. And then from there, if we wanted to continue higher, what do we have to do? We have to not just hold the 4-hour 200s as a trend support, but we also then have to get back above those hourly 200s. So here's where the rabbit hole gets even deeper, because as we test these 4-hour 200s, you now have even more decisions to be making, but they're all going to branch from the decisions that you made prior. That's why I say everything in trading really is a domino effect. How you go about executing once is going to affect how you go about executing infinitely moving forward. It's like that butterfly effect kind of thing, right? But regardless, your options are buy the 4-hour 200s and hope that the high time frame trend gets prioritized and that we can resume the uptrend amongst all time frames nonetheless. Do nothing at the 4-hour 200s, maybe hold on to that position that you've been holding on to since 10 cents, and then just wait for the 4-hour 200s to break to then invalidate the position and close in hopefully good profit. Or you can wait for the lower time frame trends to be reclaimed once again, and we would kind of perceive that to be an increase in the probabilities that we will go on to continue the trend, just simply for the fact that if we ever wanted to create a snowman, we would have to build that snowball first. And that's an analogy, and I go very in depth on that analogy in one of my previous videos, but the gist is pretty simple. If we ever wanted to get to this resistance level, we have to reclaim this local trend once again. The same local trend that allowed us to assume that a deeper pullback would be on the way in the first place. So now that we've reclaimed that local trend, we would assume that the probabilities have increased. But of course, everything is a balancing act. So that tends to mean that a reward is lesser. But from here, we go on to establish even greater bullish arguments. Not only do we reclaim the hourly 200s, but we also find our way back inside of this low time frame range. And I know that these are all squiggly lines and, this looks like a kid's drawing at the moment. Just see through it, right? We find our way back inside of the range. From there, we test the range highs. From there, we break out of the range highs. And with every single one of those significant events, we're skewing the probability of continuation of uptrend even greater in our favor. But here's the thing. It's not really affecting our confidence in the trend all too much. We already had an idea from the get-go. We speculated going back to the beginning of this video, that 4-hour 200s would be a high time frame trend per trail, so that we could play into a less actionable, very high time frame analysis. So when we retest those 4-hour 200s, the logical assumption would be if we were ever going to find a higher low on the daily, or maybe even just a very strong relief bounce, then the 4-hour 200s mixed with any relevant demand zone as confluence to that idea would be a pretty ideal zone to do that at. So we're still pretty confident in the trend in the first place. Once we reclaim these hourly 200s, that confidence essentially has peaked. Reclaiming the range, breaking this local resistance is not all that relevant. Breaking out of the range highs might be a little bit more relevant, but really what sets us on the right path once again is reclaiming the same argument that allowed us to assume a negative 25% pullback in the first place. Which, if we go back a step further, is the same argument that allows us to maintain a bullish idea and outlook on Dogecoin for all of this rally in the first place. And obviously, granted, the nuance is that we didn't know that at the time, but eventually that argument develops here. So essentially what we're doing is we're finding significant arguments. We're trying to refrain from making arbitrary sounding arguments and speculating too much, and instead we're definitively finding ways to say, hey, this time is pretty much the same as all these other times, so we're allowed to assume a similar outcome. Or this time is different than all of these times, so we're allowed to assume a different outcome. And then the same way that you engineer that way of thinking, you can then reverse engineer that way of thinking. The same thing that was very relevant and held as an argument for a very long time and a very great percentage is the same thing that we're reclaiming here once again. So from here, it's on us to find yet another significant argument for Dogecoin so that we can continuously adapt to whatever the market is doing. Now, again, a lot of this is discretionary. A lot of it is going to be pros and cons. You have a couple options available to you. You can decide that you want to tune out the noise and be very passive about the trade and just pay attention to the 4-hour 200 moving averages. Of course, that means that your drawdown in terms of UPNL from the most recent top, whatever that may be, is going to be much greater than someone who's using lower timeframes to adapt. But we would kind of imagine that the odds of us chopping ourselves up is much lesser because there's not going to be as many samples of tests at the 4-hour 200s as there might be at, say, the 15-minute 200s. So maybe you're looking at Dogecoin and saying, I need the most actionable analysis available to me at the moment. This coin is incredibly volatile, and you're doing your best to adapt to that volatility. So maybe you're going to use 15-minute 200s and trade based off of those. And as you can see, it's a pretty nicely respected trend, both on this downswing and on the reclaim upwards. And here's where we reclaim those hourly 200 moving averages. But again, you can imagine that this might come with, it's a feature, not a bug, getting chopped up along the 15-minute 200s. That's the con. The pro would be you have the most actionable approach available. So whether you're a scalp trader or if you're just very, very antsy to make sure that you don't give too much money back to the market on your beautiful Dogecoin trade, maybe you just want to stick with the hourly 200s and keep things relatively simple and just wait for the hourly 200s to break. You're then not using the most actionable analysis available to you, but you are somewhere in between the most actionable analysis and the most passive analysis. And we can imagine that the pros and the cons are kind of a mixture of either side of the extreme, right? And that pretty much sums it up. To wrap everything up, essentially the gist is you just want to find something that is reputable and significant and is allowing your gut to dictate why a specific outcome is still justifiable or no longer justifiable. And then what you want to do is you want to tie in context. So don't fall victim to being very tunnel visioned on one particular time frame. Please remember that we started on the highest time frame available to us, We developed a kind of foundation for an analysis, and then we looked to add to that foundation in a more actionable manner. And we keep going and we zoom in further and further until eventually we can find something that sticks out to us and allows us to actually execute on the environment of whatever that asset was doing on those higher timeframes. And as we're doing that, we're thinking of a decision-making process in terms of pros and cons, what trend we want to use, how do we want to manage those trades along those trends. Do we want to add back to positions? Do we want to do nothing and just let positions run? Would we rather take profit at the resistance and ask questions later, or would we rather wait for some kind of reputable trend breakdown to then start taking profit? There are all these decisions, right? And that's exactly why there's so many decisions to make, and you just have to find something that you're comfortable with and that allows you to continuously adapt to whatever the market is doing so that you can continue being objective about whatever the market is doing and give yourself the best possible chance of success. So with that said, we're going to go ahead and wrap up the video here. Don't close out just yet. I do have an announcement. For anyone who is interested in following me more closely, I do have a private group of which you can access via using my Bybit or my Femex referral link. In that private group, I host live streams 3 times a week. I give daily market updates. I show my trade setups and ideas. I talk about my top altcoin picks heading into the next week, and I do that every single week. So if you are interested in joining that private group, the best way to find out more details about that is to join my free Discord. And in that free Discord, you can come hang out, ask me questions, and even shoot me a DM for more details onto how to join the private group. And for those of you who stuck it out until the very end of this video, I have an announcement for you guys as well. Bybit is actually allowing me to give away an iPhone 15. So in order to be eligible for that giveaway, all you have to do is submit the Google form that will be attached in the link in the description of this video. And that form will just simply ask you for your email and your Bybit user ID. And that Google form does not come to me. I never see the information that you plug in. It goes directly to the Bybit backend, and then they choose a winner at the end of the giveaway period. So that giveaway is available to anyone, whether you have a Bybit account currently, whether you're already under my ref link, or if you don't have a Bybit account, you can quickly just go and make one and then submit the information to be eligible for the giveaway. With that behind us, I've said everything I need to say in this video, so I really hope you guys enjoyed. Much love and take it easy.